So what is happening this week? We've got, well, it's, as of recording, it's Tuesday, the 5th of November, which is not only Guy Fawkes night, but also the biggest fireworks session in the States there could be. And so I think we should just kick off with that, Mads. I mean, how can we not talk? I know it's the European VC and it's UK and Euro stuff, but how can we not talk about the American elections? So, what, where and how the heck do we start here?
Yeah, I mean, let's just say it's pretty, it's a very important election, right? It's going to determine lots of things. We've unpacked some of them previously. What's going to happen in tech M&A, what's going to happen with inflation, interest rates, spending, what's going to happen geopolitically, what's going to happen in Ukraine, what's going to happen in the Middle East. So much will sort of revolve around the outcome of today's election. And I wish it was just a show because it's actually quite exciting. Unfortunately, there are real world consequences too.
I'm addicted. I'm addicted to the drama. I cannot imagine a world without Trump headlines. Whether he wins or he loses, I just can't imagine. And at some point, we will have to move into a world where the news cycle isn't Trump-tastic. Even this side of the pond is just nuts.
Yeah, that's a very good argument for not wanting Trump to win, is that hopefully the Trump headlines will then go away, but who knows?
Oh, I hope so. Well, I mean, this has been the most expensive election campaign ever. I mean, between congressional and presidential, there's been $16 billion spent to produce what is effectively a dead heat tie in the polls. Nearly half of all voters have already voted, which is really, really interesting. Since COVID, obviously there was a big COVID non-attendee voting activity, but this is a massive turnout for a non-day, so pre-voting day voting, and I think it'll come down to the 7 swing states. So who's your money on?
Well, because we made the bet, and I put money on Trump, especially because I think the last couple of weeks he's looked the stronger, and right up until yesterday he was ahead in Pennsylvania, which I think is going to be the deciding state. I think
he's going to take North Carolina. I think she is going to take North Carolina.
Possibly.
I think Harris is going to take North Carolina, and I think she'll pip Pennsylvania. I do. Yeah. I think she'll take 4 of the 7.
And there is your market, right? Because that's really what it all stands and revolves around. You may be a little bit tragic when you think about it. Most important country in the world. This huge democracy, biggest economy, so much money spent, and at the end of the day, it comes down to probably a few tens of thousand voters in a few key states, and it all feels a little bit nuts that they're the ones deciding the trajectory of the globe for the next 4 years. But so be it. That's the game we're in.
I'm a little bit fearful that if he does lose, I'm a bit fearful of the blood in the streets. I don't think this is going to be. He's not going to concede. Whether it's thin margins or thick margins, he's not going to concede. So I'm a little bit fearful of the civil unrest that's going to follow should he lose. And if he wins, I'm just as fearful of the world he's going to create. I mean, let's hope he doesn't do half the things that he said in his campaign trails. I'm sure he won't. I'm sure he's playing to the base, but we'll see.
I think so. His program, if implemented in full, would be very bad news for everybody. I do think that if one takes a slightly more generous interpretation of some of his policy program, I think that might be good news for some folks. I think especially around M&A, where we have had kind of the current regime, Khan has been quite, should we say, antagonistic to big tech, which has meant just less tech M&A, which has meant less liquidity in the venture ecosystem, which has meant less money for startups. So there is kind of that angle. On the other hand, there is kind of all the stuff he's been talking about with, forcibly removing immigrants, the tariffs, all that stuff is just, it's probably not very good economic policy. It's going to drive inflation and interest rates up and would really just hurt everybody, not just Americans, but everybody in the world. So it depends, I think, a bit on your interpretation of whether you take a generous view or you take a more sort of literal view of the things he said.
I think it's also worth saying that a lot of people watch the sound bites of him, and I fall prey to this. I watch the sound bites, but when you actually watch the full sound bite in context, okay, he still sounds nuts a lot of the time, but it's almost defensible nuts. I can see he's just using colorful language and kind of being very expressive. But when a lot of the the media soundbite him, he can sound absolutely Fruit Loopy until you watch the whole thing in context. I did that with the Joe Rogan show. A lot of that stuff sounded nuts on the Twitter or the X excerpts, but when you actually listen to it, it's like, okay, I don't like you. I think you're a very unpleasant human being, but that wasn't a representative view of what you were saying. Now, one of the acts that it feels and sounds and smells like he is going to reverse is the CHIPS Act. So this is yours on the docket. I mean, we're reading Noah Smith, so reading Noah's article, which is effectively why on earth would Donald Trump want to reverse the CHIPS Act? He doesn't come up with an answer. Now, I don't know what you took from the article, so I'm going to hand over to you. What was your take and what was your read?
Noah Smith, he is very firmly in the camp of not Trump, but he's also a very sensible, kind of very centrist economist who's, I think, just produces lots of good analysis of what's going on in the state of the world, and generally is a positive and optimist, somebody that I enjoy reading. I think, and what he sort of pointed out, and others have too, is that generally the CHIPS Act was a bipartisan piece of legislation, and it's been seen as incredibly successful. Yeah. The overall bill was $280 billion, so a huge piece. But kind of the important part there was the roughly $52 billion allocated directly to semiconductor research and manufacturing. And the important part there of that was kind of the roughly $40 billion allocated to manufacturing incentives, alongside another $25 billion in tax credits. And so the idea here is really to use that money to stimulate the development of the U.S. semiconductor industry. That has been so successful that others have copied it. So we have the European Chips Act, where the EU similarly tried to sort of put aside a lot less money, 11 billion euros, and then we're hoping to drive 32 billion euros of private investment to crowd that in alongside. And if we look at some of the results we've had to date, so in the US, the Semiconductor Industry Association, they've made an analysis saying that they are expecting as much as $400 to $500 billion of investment coming out of the roughly $40 billion allocated to those manufacturing incentives. And that's phenomenal. Any government that can put in 40 billion and drive a 10x investment they're just going to be creating so much in the way of jobs and, improve trade balance and economic prosperity. And it's going to be such a positive thing. And sort of that's when you look at the CHIPS Act, really what it's driving, which is also why when, folks are talking about maybe repealing this, it just sounds absolutely nuts because it's seen as so
But what's your
successful.
take on why? Because Noah Smith didn't quite, he was very non-committal. It feels like it was a Biden act and therefore it's going to go on an emotional basis. But what was your take on why it would be repealed?
So this is back to what I said earlier, is are we taking Trump literally, or are we maybe giving him some artistic license in terms of him saying stuff off the cuff? As you say, he can often come across as a bit of an unpleasant human being. I mean, he will oppose anything just because it comes from the other side, at least rhetorically. The question is, if he gets reelected, if he gets into power, if he got into power, would he actually cancel it? And it just seems such a nuts thing to do, something that's been so
Mike
successful.
Johnson repeated him. Bowyer reports, there's on camera him saying, and Mike Johnson, Speaker Johnson, repeating him, but maybe he's just repeating what he's heard rather than what he's been briefed as actually.
That's the question. Has he been told, right? Has he been told that the thing you have to go and do is to basically poo-poo anything the existing administration has sponsored?
Yeah.
And then after the election, we'll do whatever we please.
Well, let's stay stateside. So next up, I want to speak about, I've been reading a lot about Berkshire Hathaway and basically.
So we should go there, but I think before we go there, we do want to cover Europe, and I think what Europe has tried to do, what's worked and what probably hasn't worked yet, is instructive, and I think it's worth touching on. So as I mentioned, the European Chips Act, similarly was trying to allocate 11 billion euros, but a smaller portion of that comes from our quote unquote federal budget, right? So kind of the commission budget, I think it's still 3 billion euros, with the remainder meant to be coming from the national governments. And the noises so far is that Intel, they were talking about kind of up to 33 billion of investment in Germany and new plants there. TSMC discussing a new $10 billion fab in Dresden.
Because
Infineon,
that's working
similarly,
well. TSMC going to Arizona has worked really well, hasn't it?
extremely well.
Yeah.
The people are saying that their plant in the US now is performing better than the plant in Taiwan. It should be an extraordinary success for the US. So there has been talks in Europe about some of these plants and some of these things. And if you're generous, you can kind of tot it up to maybe 50, 60 billion euros. But the challenge is that when we look at the progress of, how much digging has actually started, how many shovels have gone into the ground, we're just nowhere near as far along. Lots of questions around Intel in general. Will they be able to pull through? Possibly not. And other companies sort of kind of the ideas were there quite quickly, but have we then seen the action on them? I think some of the differences is in the US, the federal government was able to provide more funding directly out of the big central pot, as opposed to having to rely on individual states to do it, which is always more complicated. You were able to have streamlined regulations and especially approvals to make it very quick to get things rolling. And of course, you have an existing ecosystem, which is bigger in the US, although we often use that as an excuse. And, we've got semiconductor expertise in Europe that we should have been able to rely on. So it seems like we just haven't been quite as bold, maybe quite as ambitious. And you can only hope that there is a sort of release 2 of this, a version 2 of this from a European perspective that gets beefed up a little bit so we can actually get a move on and get not from 10, 20, 30, 40 billion, but into the hundreds of billions we need to really create a truly competitive industry in this space.
But the obvious answer is to get SoftBank and the government in the UK to push ARM to build a chips factory in Cambridge, right? That would be the obvious of the obvious of the obvious.
Yeah, I'm sure if the government puts enough capital behind it, it probably could. But again, previous government was talking about quite a lot of funding set aside for semiconductors.
Yeah,
But I think they were
squashed
talking
it.
about it is in headline terms without actually allocating the money in the budget. New administration comes in, finds out that promises have been made, but not necessarily the funds allocated for, and ambition has now been scaled back a lot. And so the question is, was it right to spend this much money on increasing public sector salaries and pensions, right? Which is a noble thing to do, but maybe we should have put a little bit more money into investing in things that will create future wealth, as opposed to just spending money we don't even have right now.
Well, we're going to get to Starmer and Reeves and some of the bit more budgetary stuff a bit later on, but why do we do it now? Why do we step straight in now? Because so reading all of the recent reports, and I've seen something in the FT from Starmer himself. He wrote his little letter. It feels like the mantra wasn't invest, 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 has been purported, as in came out of their mouths live at the budget, but stability. So I kind of buy, and what's your take on this? I kind of buy, okay, we wanted to create this kind of stability, structural, let's sort the NHS, let's fill the fiscal gap, and then we're going to have the investment conversation. So this is me being a possibly a naive optimist, but it feels like they're still making the right noises about investment, but they're not actually doing anything just yet. But what's your take? Is there anything that they can do? Maybe not political behind the scenes they can push?
I don't think it's behind the scenes. I think it's exactly the opposite that's needed. And, as we've talked about before, there was initially a willingness to give them a little bit the benefit of the doubt, also because kind of the previous administration had sort of run out of energy and felt a bit tired. The challenge...
Decency, energy, money, and the list can go on.
The challenge, as we've talked about, is you have fundamentally an administration now that even if they want to do the right thing, there's questions as to whether they actually really understand business and understand how wealth is created. With the best will in the world, I mean, Starmer's not a dummy, but he's a public prosecutor. I mean, he's a lawyer, right? Reeves is a very smart economist. Very good with numbers, I'm sure, but she's never built a company. There aren't that many on the labor benches that have been in business and really understand how business works. And so I think a lot of times people default to what they know. And there are a lot of civil servants and, government workers. And so they have a lot of knowledge and affinity for those sectors. And that's where they go and that's where they focus. We saw today, they're talking about the third runway at Heathrow. And we know if you are a private company and you need to allocate capital to something, the most important thing is certainty. The last thing you want to do, the last thing you can do and afford to do is to spend years of uncertainty, of allocating money to architects and engineers and designers and consultants if you don't know whether a project is going to go ahead or not. And so what governments could do is not go behind the scenes, go in front of the scenes and say, we are open for business. If you want to invest here, if you want to expand and invest in infrastructure, airports, energy, if you want to do this stuff, we are going to fast track approvals. We're going to make sure you can put the shovels in the ground quickly, right? We're going to make stuff happen. Instead, what the government has said, the official line is, well, why don't they develop all the plans and the applications and put them in, and then we'll tell them what we think and whether we support this third runway or not. And that is exactly the wrong approach to take, right? You got to be in partnership with business, not behave in this bureaucratic way where it's like, well, first you do all the work and spend all the money, and then, later down the line, we'll tell you whether we think it's a good idea or not. No. If you want to get dynamism back, you got to take a different approach.
You don't have to be a business builder, an entrepreneur, an investor to understand that planning, resolving and creating the frameworks for investment are smart things to do. So I kind of get what you're saying. I mean, maybe it's the previous point you were mentioning, but they know this. They don't need to be the smartest business people on the planet to understand that you need investment and you need smart people doing things and you need innovation. So I can't work out why they're not doing it. The only thing I can think of is politics. The only thing I can think of is that, the budget, they wanted to just be seen to be sensible and not like the previous crew. And then I'm hoping that now comes the investment piece and the smart investment piece and the regulation changes, the planning changes. Starmer and Reeves have both said the words.
I think the third runway at Heathrow is an excellent litmus test. You want to attract private capital into the UK to drive economic growth. There's a project here that the capital and the country has been crying out for 20 years. We have international backers ready to go.
But isn't that the problem? Isn't that the political hot potato? It's got so much legacy around it.
But everything does. That's why nothing gets done. That's exactly this. This is you can no longer be behind the scenes. Somebody's got to stand up. Somebody whose name starts with Kieran and ends with Starmer is going to stand up and say, enough. We're going to prove this stuff. It's going to happen. If you want to invest and build and make and do and grow, we're going to back it. We're going to fast track it. And the naysayers and the people that want to stop it, they're not going to have a voice. We're not going to listen to them now because we need the country to go back to building and growing.
Yeah.
And unless you get that kind of message from the top, it's going to be another 5 years of not very much getting done.
Right. Well, let's go back to the previous point. So this does have also, I think, ramifications for Europe in Berkshire Hathaway liquidating and cashing up really. Now, over the last 20 years, they've pushed their cash reserves from pretty negligible nothing into the 300 billion bracket, and they've been a net seller of stock for eight consecutive quarters. So their cash reserves now sit at $325 billion. So what is going on with Warren Buffett? And the obvious thing to say is that he's saying that everything's overpriced, there's too much risk, I'm going to cash out and I'm going to wait for something to happen on the other side, and then I'll come back in. So what's happening here from your perspective?
He is, arguably, I can't even say the smartest investor of our generation because he's not even from our generation, right? He's
from the 1820s. He's in black and white still.
Sometimes seems like that. He's been around for so long, you can barely count it. And it's just phenomenal that he stayed on top for so long and made so many.
At 96, the dude is 96.
It's unbelievable. So many incredible bets. And he often said, I only invest in things I can understand really well. He always stayed clear of technology right until Apple stopped being a tech play and started being a fundamentals play, right? When you can buy Apple at a price earnings of 10, that's when he leaned in heavily and did the investment of eternity, right? Nobody's ever made that much money.
It was a 3x in 10 years, was it?
Yeah, but the amount put in, right?
Yeah.
It's one thing to put in $1 million and get 3 million out. It's something else
Was
to
it
put in.
69? Did he do 69 billion or something?
That's it. Something else to put $60 billion in and take
Yeah.
$180 billion
Yeah,
out, right? It's
well,
just
it's
nuts.
60 billion.
It's
Wow, what the hell?
Yeah, it's a whole different ball game, and there are just not that many opportunities coming around where you can deploy that much capital and get that kind of return. So
Mm.
he's done it. He's done extremely well. What is happening? On so many aspects, U.S. equities are expensive. They're expensive now. They've been growing extremely well for a long time, and many people expect some mean reversion, right? Expect that after 10, 15 years of exceptional returns, the S&P 500 is going to start to slow down, and returns over the next 10, 15 years will be lower. And what's the one thing that can really change that? Well, that's the paradigm shift we see in technology. It's AI. I mean, we talked about all the cases. We spoke about them earlier today. Companies being able to take, hundreds of workers out of specific functions, massive cost savings, and the ability to increase customer support and quality at the same time. If that paradigm shift comes good the way we think it will, well, the S&P's got a long way still to go, right? Because earnings are going to continue to grow at a very nice clip. But if you're Warren Buffett and you're 96 and you don't tend to invest in things that could potentially happen, but you like to invest in the numbers and the fundamentals, well, this is maybe a play that's a notch too speculative. And so he's going into cash. And I guess with his investment strategy and philosophy, that makes sense.
Yeah, he's been tapping out for the last couple of years, hasn't he? That's a lot of money. What is next on the docket? So I guess we're staying stateside. We have been playing with ChatGPT search, and it looks like quite a compelling product. I mean, I flipped my default browser to ChatGPT. So we've talked about this a lot, but is this another chip away at Google search dominance, do you think? I mean, obviously this is price. You have to pay, I think, for the premium version. I think it was on a wait list and you have to pay. But is this going to be another stick in the side of Google, or will Gemini come back? Or what's your take on this?
I mean, there's a reason why Sergey Brin is back in the lab full time now, right?
Tinkering.
Well, I think it's more than just tinkering. Google fundamentally has got to reinvent itself. So the company's quite diversified today. People don't always appreciate that YouTube is, on a standalone basis, a $50 billion revenue business. Okay,
But search is still the lion's share, right? I mean, I've not seen the stats in a long time, but it was I think 80% of their revenue was search.
Search is still the biggest business, but it's created other business lines. And there's you've got two things that are attacking now. You have on one hand, you have this nasty antitrust thing, potential breakup of Google, and then you have, quite frankly, these LLMs and OpenAI on the other side. But, people talk about Perplexity. I think it's a very nice product. I don't frankly see them having the momentum that OpenAI does. And OpenAI is formidable. The engineering, the quality of the products they push out, the speed of iteration. I like Gemini. I think there are some aspects to it that are very good, but gosh, Sam Altman, he's ahead right now. And if I was Sundar over at Google, I would be a little worried, I think.
Yeah, I'm with you. Maybe it's what you know and what you're used to. And I dare say it won't be easy to flick-flack between and test, but GPT is very, very smart. And they're doing well. I mean, the next topic was, big tech enjoying all the gains from this AI boom. And it looks like since GPT's launch in November 22, it's just been, chasmic $8 trillion of market cap. It is just mega. Where next, I guess, is the obvious question, and where can Europe play?
I think we've got to get into the game on semiconductors, as we spoke about earlier.
Do you think we're going to have to make some chips?
Yeah, also because that's strategic. We've seen shortage of semis before, and it goes into everything. It goes into cars, it goes into defense, it goes into...
And it's not going anywhere, is it? It's not like there's going to be a supplanted technology. I mean, if you're not making chips and being very smart about it, then you really should be.
Yeah, we've got stuff to build on, right? We got ARM with architecture, we got ASML, which creates so much of the foundational technology. There's a lot of stuff here. I think saying that we can't do anything is just a bad excuse. So we just need to have
I totally agree.
More ambition.
And I was speaking with a family office last week who were talking about their strategy of investing in AI is either the UK or the Bay. So they only look at for AI, for the smartest brains, for the talent, they only look here or there. And I thought that was a really interesting, obviously only anecdotal, but I thought it was a really interesting point. I was like, yeah, that we have some ridiculously smart people here. So let's hope they get utilized and we build some stuff. The last thing on the docket is the Balderton annual report on startup founder mental health. There's been a lot of shifts. So they do an annual survey, and this year they surveyed 128 entrepreneurs. And what that report has shown is that stress is a significant problem, and it's gone up by 62% from last year. So the factors, just to list a couple of the factors that it kind of went into some more of the detail about, was the impact on older founders. Now, what people I think don't fully always appreciate is the average age of a founder is about 39, depending on which report you read. It goes from 35 to 42, somewhere in that bracket. So these aren't 22-year-old Mark Zuckerberg-y Ivy League kids. The average age of a startup founder tends to be quite old. Founders don't like talking to investors is one of the aspects that came up, which I understand, having sat on both sides of the desk. The financial stress, and now this has obviously been driven by, there was a number of down rounds last year. 30% of deals last year were down rounds. 42% of founders state that financial stress was a massive contributor to burnout. And the question, I guess, for you and us in the room is about what role should VCs play in the startup founder mental health issue, do you think?
I think it's a really good question. And I think there are lots of different vectors to it. I would say importantly, upfront, we have to be really candid and conscious about the model of venture capital and the fact that when we invest, it's not a loan, and that we expect some companies not to succeed. And that's part of the industry, and that's part of how it's supposed to work. I mean, it's not that we deliberately invest in companies and expect them to blow up. If a company doesn't work out, we're not going to hold the founder personally liable and tell them they're bad people or, it's somehow all their fault or anything like this. The expectation is that some businesses won't work for a wide variety of reasons.
Is venture capital too aggressive?
I think there are some really bad actors. I think there's some investors that just don't quite get it and become personally vindictive if companies fail. Now, there are also founders that lie to avoid owing up to reality. So I wouldn't put it all on the investors, but I think there is sometimes a bad dynamic. And so I think it's so important that investors are not, if a founder fails, if the company just didn't work out, that's okay, right? Then we try and figure out if we can do the next one, as opposed to, oh, you're a bad human being, or this didn't work, or whatever, it's all your fault. I think we have to give founders license to aim big and try to go big, and for things sometimes not to work out, and that's okay.
You alluded to this at the beginning of your bit, but there is this misconception, I think, that venture capital is an extension to taking angel funding or other routes of funding. And it's not. It is a very different track. And it is go big, go global, go fast, speed of sale, speed of scale, which doesn't suit. I mean, I think venture capital is that odd paradigm where it virtually suits no one. It almost suits none of the 100 startups that are started. It probably doesn't suit 99. So, and I'm not convinced that founders genuinely sometimes know what it is, and they very quickly learn. But I'm always intrigued by what services or facilities we should set up, coaching, support. I know some funds with some mompreneurs have child support services, so taking some of the strain and stress away outside of the business, or dealing with some other aspects of life outside of the business. And I'm not sure whether VC should or shouldn't do those things. So that's the open-ended question, I guess, that I have for us is what should we do to support founders better with not just their mental health, but their, the performative side, not just keeping them out of the therapist's chair, but how do you improve your mental strength and your abilities and your capabilities? So I don't know if you have any closing thoughts before we wind up, my dear man.
It is a performance sport. Succeeding with a startup, and I don't mean a lifestyle business. I don't mean starting a company that you borrow a bit of money for and you build a nice little business. But creating a technology startup that you want to build into a leading global company that's a category leader that will compete in markets across the world. And with compete, I mean defeat the competition, right? Really become number one. To do that, that's like saying, I want to become at the top of the podium at the Olympics. That means you're going to have to be, and you're going to have to create a team that is the best of the best in the world at what you do. Now, everything else flows from that. So there will be a lot of sacrifices along the way, right? Just like the Olympians who clinched the gold medal, they have not had the same life, the same hobbies, the same, free time as maybe others that didn't choose as hard a route. And I think startups are the same. You have to be willing to suffer some sacrifices along the way, and you have to be prepared for that. I think sometimes people get a bit confused, and we want to create more companies, more businesses. We want to help people, and a lot of that should become lifestyle businesses, and that's a very different trajectory. But if you want to go down the venture route and become a global leader, that's a very specific thing. And I think a lot of the things that we sometimes conflate with this, they're not really that. They're not about creating Olympic glory. They can be good and fair and fine enough themselves, but there's something else. So just being honest and open and frank about what this is. This is a performance sport. You raise this money, you're trying to be the best in the world at what you do. All that entails.
Know the beast, get on the venture track. If you're going to do it, go for it. That is all we have time for. It has been The Seed. It is Tuesday, the 5th of November. All of the love. See you next week.
See ya. Have a good one.
Here's a few words from our beloved sponsor. This episode comes to you by the support of our partners. Portfolio IQ by Synaptic. Portfolio IQ is the most effective way to track your portfolio. It pulls data from all sources, board decks, financials, MIS sheets, forms, emails, everything, and creates a true single source of truth for your portfolio data. With Portfolio IQ, you can track all the metrics that matter, not just the standard metrics. All metrics are reviewed by a team of certified accountants. You'll get 100% accuracy. Not sure about a number? Just click on it to see the exact cell in the document it came from. Portfolio IQ also adds a layer of standardization to make the data comparable and useful for benchmarking, valuations, and reporting. All of this is as simple as forwarding an email. Zero added work for your fund or your portfolio companies. Portfolio monitoring that you'll fall in love with. Go to synaptic.com/portfolio IQ. That's synaptic.com/portfolio IQ. The good folks at Synaptic will be happy to give you a no-cost trial.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.